Silvia, muchísimas gracias por tu testimonio, por tus historias, por tu confianza y por reflexiones tan profundas, ¿no? La confianza salva vidas, eso no lo habíamos dicho esta mañana y yo creo que es una reflexión muy importante. Our final panel will discuss the challenges of the financial system in Europe and globally. So now we have to welcome, and we are very honored to have you both here. Thank you very much. Pablo Hernández de Cos, Governor of the Bank of Spain, Martin Gilbert, Chairman of Aberdeen Standard Investments, and José Antonio Álvarez, our CEO, of course, moderated by James Harding again, who will at the end also do a brief summary of the conference's conclusions. Thank you.
I think you're there. Governor José Antonio Martin. Thank you very much, everyone, and thank you, Sylvia. If you think that bankers speak strangely, wait till you get to the end of our session with the Governor of the Bank of Spain, José Antonio, and Martin Gilbert. I think we are now in for what I think of as the hardcore banking session. So this is the time, I hope that, having talked a good deal about trust, we can actually zone in a little on the state of banks and the banking sector as relates to that bigger subject. And if I can, Governor, I'm going to start with you because we've talked, if you like, about the idea of business, particularly banks, doing good today. But I want to start with whether or not they're doing well and your macroeconomic view on how the banking sector is faring. There's quite a lot of anxiety. One of the questions from a member of the audience is about levels of debt. How do you look at the banking sector and the outlook for the next year?
Only for the next year.
Yeah, oh, well, you can do the week if you like.
No, I think, I mean, most of the people who are on the audience read all the reports that are published by the Financial Stability Board, the BIS, the ESRB at the European level, the Bank of Spain. And I think we all agree that the situation of the banking system, either in Spain, in Europe, or at the world level, is in a much better situation than it was 1 decade ago. And I could say that the low interest rate environment and of course the possibility that this environment might create an incentive for risk is creating effectively this risk appetite. But probably we are observing this riskier profile in the non-banking sector more than in the banking sector. And I think we have plenty of evidence in the Spanish case as well of this development, but I think it's particularly relevant, this profile in the US case. I mean, the numbers for the Spanish case are dramatic. The change is dramatic. You look at concentration risk in certain sectors, in particular in the construction sector. You look at NPLs. You look at repossessed assets. The situation is in a much better situation. Probably the biggest concern for the banks, but also for supervisors and regulatory agencies, is in the case of the banking sector, is not so much about the concentration of risk, but on the low profitability.
On the, sorry?
Low profitability. And here, I think there are some structural changes. It's not only related to monetary policy, although of course I guess that José Antonio will try to focus on that later. Not only, but I think there are the sector. I think we have to acknowledge that is in a completely different environment, a structural environment, and we have to focus on how to deal with this new environment and what banks should do in this new environment. Just to finish in this first intervention, to me, the reaction of monetary policy is a kind of endogenous one to a low growth environment, low nominal growth environment, low inflation environment, but also low real growth environment, which is derived for the low productivity environment that we are observing, which is derived as well for from the demographics that we are observing in terms of increases of dependencies ratio, aging of population, etc. And in this environment, monetary policy has to react, and this is why interest rates are so low, and this is impacting, among others, on the banking sector.
And Martin, I'm going to come to you in a moment about this same theme, but Governor, can I just stick with it for one moment? If you were listening through the course of the day, if there was a theme, it's been this frustration with leadership, with government, with institution building. When you look out now and try and think about how you resolve some of the issues around public confidence in our financial system and our capitalist system. What are the levers that the Bank of Spain can effectively pull to make a meaningful change?
Yeah. No, on this I have to be very clear. For me, trust is not a question of faith. That's a religious concept. It has to be based on hard data. And if you want trust on public institutions have to deliver. Mm-hmm. So Bank of Spain has to deliver on its mandate on inflation, of course, together with the European Central Bank, or accompanying the European Central Bank on its decisions, and we have to deliver on the guaranteeing the financial stability of the banking sector. Then we can talk about how to communicate, to be more accountable, other things, no, that are also important for trust. But the main element for me is that we have to deliver. And the loss in confidence and the loss in trust that citizens have today on public institutions, for me, is basically due to the fact that we didn't deliver.
That you didn't deliver?
Yeah.
Your judgment on the last decade, we started the last session with a look at the last decade. Do you feel that the underlying interventions of central banks are responsible for this division between elites and the masses over the nature of our capitalist system, the nature of the market?
No, probably it's a consequence. It's a consequence of that, but on the contrary, I think that the decisions taken by central banks, precisely what they intend, what they try, is to deliver on our mandate, for example, on the inflation aim.
Okay. Martin Gilbert, can we just look a little forwards? There are a lot of people who might say, in a year's time, we all came together in Madrid, it was wonderful, we talked about trust, but that was the luxury of a long bull market, of actually quite a healthy recovery, and it could well be that in a year's time, a lot of fears that exist in the market about the concentrations of risk the governor talked about have come to pass. How nervous should we be about the market outlook?
Well, I don't think we're going to see a recession, but we're definitely going to see a slowing down in the global economy. And there's no doubt that we've had a great bull run in equities. We've had a 40-year bull run, really, in fixed income. So I remember when I first started, the UK government debt was 18%, and it's now 1% or whatever. So we've had a fantastic run. And I was going to say, one of the unintended consequences of the low interest rates, which the central banks quite rightly brought in, was it made the wealthier wealthy because they had access to credit, which allowed them to buy assets, which have been a great investment at the moment. But what we're seeing, because markets are so high, the big asset owners of the world don't know where to put their money. So you look at the Japanese insurers, the Korean insurers, they're moving money into European credit. The Canadians, a lot of the big asset owners are moving from public markets to private markets, and that is a big trend we're seeing. About 15% of world assets are in private markets, and that's going to 20%. But if you go to Canada, they're already at 50%. So the Canadians, as an example, are the largest owners of student housing in the UK. So the risk is this move into more illiquid assets. As long as you don't need the money, it's fine. But if you do need the money, do not invest in illiquid assets. And of course, the retail investor wants access to these asset classes that the institutional investors have access to. And so there is a danger in that liquidity.
Is it? I mean, that's a huge point. I didn't know that in Canada, but the implications of that is you've got a liquidity risk if you need the money. There is presumably also an accountability risk. The accountability risk is that, you know, as we've seen in companies like WeWork, the extent to which you have scrutiny on companies that are privately held can often be quite different from the ones that are publicly held.
Yeah, there is a definite lack of trust at the moment in valuation of private equity, and there is a perception, now whether it's reality or not, that you could you can just raise the valuation of private equity by having another round at a higher price, and that allows you to revalue. But again, I don't think we should underestimate the effect that the Woodford fund closures have had in the UK, because this was the biggest retail fund. And for it initially to be gated and now wound up from a fund manager that was perceived to be the best income fund manager around, who made his name in big public market stocks, to really change his style, it has been huge in the UK, and will dent confidence, I think.
Just there's a well-known, what passes as a celebrity in the world of fund management, a man called Neil Woodford, who in the UK, if you didn't follow, left Invesco and set up his own fund. It's fair to say the thing imploded.
Yeah, it imploded, and I think it'll lead to, hopefully, regulators, and they've been looking at this for a number of years, looking at what should be held in daily liquidity funds. So I think with things like property or private credit or these sort of things, we've got to move away from daily liquidity to more monthly, weekly.
But there's an interesting thing there, isn't there, about trust, which is, you know, if you work in a bank, you would say, oh, I've got nothing to do with Neil Woodford, that's not my line of work, in the same way that people would say, I've got absolutely nothing to do with the world of SoftBank. But in public perception, one bleeds to the other.
Yeah, it's all part of the financial system, and we in the asset management industry tried to say we were different from bankers, but we failed. And I see we're even less trusted than investment bankers, so that was, we haven't done a great job at projecting our own image.
Well, that's why they've got a journalist on the stage to make you all feel good, because no other, the trust of us is the lowest of all. José Antonio, can we just stick with this at the outset, just the macroeconomic outlook, the systemic outlook for banks? Anna said at the beginning of the day, there's these sort of short-term pressures and the medium, longer-term ones. When you're thinking about the short term in terms of delivery for shareholders, what's on your mind?
Well, in the short run, naturally depends on the regions. We are facing, I'm referring probably in this case to Europe, where probably the market has more doubts based on valuations of the banks. In Europe, it's true that the banks face a situation in which that is difficult. To grow revenues is really difficult. As the governor said, is interest rates, but it's much more than that. Yeah. So at the end, interest rates reflect the central banks fulfilling their mandate. They have a mandate to control inflation. In this mandate is to fight deflation. And at some point, in Europe, it was even worse with the sovereign debt crisis going on. And since the famous whatever it takes, we enter into a situation in which first was the quantitative easing, reduction in interest rates, and finally in 2016 we enter into the negative territory in interest rate. That was not new because Japan has been there for a while, but was new for us. Yeah? And all of us, we thought at the time, well, this is temporary, and well, this is going to help. At the time, the industry was in, particularly Southern European countries, banks were suffering with non-performing assets. This will help to fund these non-performing assets, to get rid of these assets out of the balance sheet is going to help a lot. And this worked, honestly. But suddenly, we were expecting, not that far away, 1 year ago, 1 or 2 years ago, that the interest rates will go up eventually in 2019. And suddenly, things changed the other way around. Deceleration of the slowdown in the economy came along, and the central bank reacted to the new situation, saying, no, you're going to have negative interest rates for a long period of time. And this is a different scenario. So when the negative interest rates become the new normal, things are probably different. In the way that from the mathematical point of view, when you go from +2 to -2, well, it's just mathematics. From the behavioral point of view, it's totally different, and we are having this experience right now.
And José Antonio, because sitting here through the course of the day, I've been trying to think to myself, if you were running a bank at a time where there's a political pressure to do more on climate, on financial inclusion, on a whole range of issues that interest your employees, but the sort of natural level of profitability is much lower. How much does the one impact the other? How much is it realistically possible to change the organization and change outcomes when you're in a low profitability environment?
As a principle, I couldn't accept that what you call the natural level of profitability is lower. What you call what you call natural, probably I need to do something about.
Right.
Or my stakeholders expect that we do something about. And this is about the challenges we are facing at the end. We are facing challenges of having in front of us this macro environment. On the other side, we have a way to do business that our distribution model has been disrupted in a significant way because negative interest rates. So the large retail network that we have, the main purpose was to gather deposits, and suddenly deposits, the value of the deposits in terms of P&L is meaningless, and we need to face how the distribution is going to work in the future. Fortunately, and I do see this as a positive, digitalization is coming along and it's going to help. It's helping us, in fact, to become much more efficient in the way we conduct and we conduct our business on the distribution side. And this is helping us, yeah? So this is one effect. It's true that this is not enough in the short run. We need to do more, but this is a significant transformation that is going on in all the industries. So when you look at our, when we were talking with our shareholders and we talk about the Latin America and Europe, our equity story is totally different.
Yeah, of course.
Yeah, totally different. One side is about growth and financial inclusion and other things. Another is to be much more efficient, to increase the productivity using all the tools we have in our hand. Probably the most important one in the short run is digitalization. That is going to help. It's helping already. So the cost per transaction is falling quite dramatically. Yeah.
Okay. Governor, I'm going to come back to you if I may. There was a moment in the conversation with Carl Bildt and Javier Solana where you thought, actually, yes, there is a strange consequence of Brexit and a renewed belief in what the institutions of Europe could do. But the reality is that single banking union has not happened, that the north-south divisions within Europe remain, you know, really stark. How much do you think Spain and the economy here could be helped by actually a renewed push on what I think of as more Europe, a more integrated European market?
Well, I don't know whether I buy the argument that Brexit could have any positive effect.
On anything.
So I put it in a more simple way. We are entering into a deceleration path for the euro area economy, which is very obvious when you compare the figures for this year as compared to the one that we have observed in the last 2 years. And at the same time, we all agree, all policymakers, all economists agree that true, we have improved in a dramatic way the governance of the euro area, but at the same time, there are some elements that have not been achieved. And these elements, I think, that are particularly important in order to provide the euro area with resilience to a situation like the one that we are already observing. And this means, of course, closing the banking union with the European Deposit Insurance Scheme, which means a further development of the capital markets union, and perhaps even more important in the current context, some development of a kind of fiscal union. So in this discussion that we are having, to what extent monetary policy has done whatever it takes, or even more than that, whether we have reached our limits or not, the most interesting part of it is that what we are now trying is to push for an effort for fiscal policy to help us in order to deal with the current situation. And I think the terms of the discussion are not very helpful in my view, because what we are trying to do is to push Germany to do some fiscal expansionary measures in order to help the periphery or the other countries in general, or the euro area as a whole. And I think that's not the correct way to do things. What we need is a fiscal stabilization capacity at the euro area that is decided at the euro area level, let's say in Brussels, the political economy of such a thing, I think it would be much easier and much better and much more effective than trying to ask the Netherlands or Germany for more fiscal expansion.
And Governor, you know, we've talking about these issues, single banking union, capital markets union, deposit insurance for a decade more. We've got a new central bank governor and a new commission. How realistic is it that we will see meaningful progress on this front, do you think, in this next term?
I mean, I cannot be very optimistic given at the last 2 years, but at the same time, it's true that Europe has delivered. The problem is that we have delivered through a crisis normally. No? I hope this time we do it before.
Okay. Martin, I wanted to come back, if we could, to the main subject of the day, which was trust, right? And particularly the arguments that Anna set out right at the beginning, which was about the pivot as a result of the business roundtable and the behavior of companies. The point about, I think, about asset management is that that's where the rubber hits the road. That's where actually people make a decision about which companies they back, which leaderships they back. Do you think that this is all very well, the conversation about purpose, but when you look at, you know, the teams that have worked with you, anyone is really making a decision about where to invest based on what they say about purpose and public outcomes?
Oh no, absolutely. It's changing dramatically.
Is it really?
The world is, the big asset owners have really changed their approach. They want to be more long-term. There is no question about that when we speak to them. They now want ESG to be embedded within your investment process. Interestingly, the US lead the world in asset management, but not ESG.
Yes.
They're quite far behind in ESG. Now, a lot of institutions say they do it, but they pay lip service to it. So I think you genuinely have to be committed to it. But I think also you've got to move on to sustainability and then impact, because I think impact's going to be a big area in 10 or 20 years. The generation, the younger generation, do want to see you investing for good, and you can find investments like that. I think the change in oil has been quite dramatic. I mean, even over the last year, just the disinvestment from the big oil companies has been hugely marked. I mean, Norway, a lot of the big institutions are now selling down oil and coal. Of course, the cynic says they'll become the new tobacco and they'll be great investments for a period of time. But there is definitely a sea change in what investors want to see us invest in.
And how skeptical should we be about ESG, about environment, society, and governance? As in, how rigorous are the methodologies of scrutinizing?
Well, that's what I mean. I mean, you've got to dig a bit deeper to see that it is actually embedded within the process. So we would have about 25 people and just doing ESG and just looking at it. You've also got to extend it to bonds now and real estate. Because, of course, if you're investing in new buildings, you want to make sure they're going to be built to the latest environmental standards. And then you've got to take it to the next level, which is, it's all very well saying don't produce coal, but you've got to stop coal power stations being built. In India's doing something like 400, China's doing 200. And their view is, look, you guys have polluted the world long enough. It's now our turn, and to a certain extent. So you've got to really take it into the world of sovereign debt as well. So it's a big area, and it's getting more complicated.
And can I just ask you, we've got one of the questions here, I put the question to the governor about debt and the sort of macroeconomic position. But one of the questions I think is sort of in the water, if you like, which is a fundamental question about whether or not we've reached peak globalization. It's whether or not can globalization in goods, services, and technology still shape the rules so they're good for our workers and our businesses. What do you think?
I think we have reached the peak. I mean, and Trump is going the other way, and he's banking on why he's telling the story that globalization hasn't worked for you, the average worker in the US, and that is really the basis of his support. The fascinating thing about the trade war with China, and the reason I don't think it'll be solved anytime soon, is it's become quite popular across party, cross government departments, cross various social strata. So it's become embedded now, and people genuinely think that they'll get a better life if they have the trade war with China. There'll be some concessions coming up to the election because he obviously it's a bit of a boost to the economy, but it's pretty embedded in the US.
Interesting. Jose Antonio, can I talk to you about both of those things? Firstly, when you do the rounds with investors, honestly, how often do they ask you about your environmental impact or your or governance or issues about society? How much does ESG really impact their investment decisions in Santander?
Well, this is becoming more and more common, to have someone else in the room that looks at the equity story from this angle. So this is becoming really common.
Common as in more than half of the meetings that you'd have?
No, I would say more than that.
More than that?
The big houses, all of them.
All absolutely.
Of them. The big houses, all of them. So you face normally big houses, big asset managers, all of them have ESG, environmental issues in the equity story, all of them. When it comes to the most smaller players, more specialized in one sector or another, well, it's less often, this happens. But also affect internally the bank, and very often we have in our risk committees the discussion about loans, if we should grant or not a loan based on environmental issues or defense issues, like the ones that Javier and Carl raised this morning with Boeing, Airbus, and all these things. And if you go to our AGM, every year we got in our AGM a couple of questions, some of them if we found defense companies, some others in relation with environment, reservoirs, and all these things. And those are, from the risk standpoint of view, sometimes difficult choices to make. Yeah, so it's relatively easy to say, call no. Well, easy in a developed country, in a mature market, not so easy in an emerging country that the only source of cheap energy that they have is coal. Fortunately, we don't have to make this decision. But this is a difficult choice to make there. There's another with the defense issues when have the democracies the right to defend themselves or not?
Yes.
Do we fund the companies that make possible the defense of the democracies or not? So it's defense, it's weapons. It's not very popular either, but well, those are the choices that we have in our committees, when we discuss.
And we haven't yet seen, or maybe you have, but generally you haven't yet seen the intersection of political activism and, if you like, shareholder activism. The combination of people who are trying to use their stake in a big financial institution to change a political agenda. Are you beginning to see more of that, or you think that's on the horizon?
It's the way you say, to my knowledge, I haven't seen it.
So can I ask you just then about that second point about peak globalization? Because of course, Santander, and you look at the expansion and the promise in Latin America, arguably North America too, how much is the argument of Santander actually at odds with that current view that we've reached a plateau in globalization?
Well, I have mixed feelings in relation with this. On one side, I see what is going on in the political side, that's, as was mentioning before, and this is happening. This is an anti-globalization political thinking going on in the world. But on the other side, I do see the digital companies becoming global from the very beginning. Mm-hmm. So and we have these two trends. On one side, on the political side, we have this anti-globalization stance. On the other side, suddenly all of us use the Googles, the Facebook, and of this world, that they become global in the same instant they were born. And now the technology allows you to become global the very first day.
Yeah.
How long it took to the company to become global 50 years ago, 60 years ago? How long it takes today? The time has short dramatically. So on one side, globalization politically is not politically correct in these days, or it's less politically correct than it was. But on the other side, what we're seeing exactly in the real world is the opposite. So Amazon, the marketplaces, put everything, doesn't matter where this is built, everywhere in the world instantaneously. And this is like two conflicting things from the political side and from the reality that digitalization is bringing to the economy, yeah?
Okay. Well, listen, in the last 5 minutes, I want to come back and ask each of you, and I'm going to hand over to you at the end, if I may, Jose Antonio. I was really interested by the question that Alejandra asked about where people's concerns were. Climate, inequality, and I wanted to do something unfair, if I may, to you, Governor, because everyone knows what the yes, once you're up here, you're done. You know, everyone knows what the mandate of a central bank is, but that's very different to the expectations on a central banker. And it seems to me that now we look to our central bankers to say, okay, we want you to have an agenda on climate, on inequality, on digital and data security. So if you were answering Alejandra's question, in your hierarchy of additional responsibilities, what do you think of as your agenda around those, again, public outcomes?
Well, let me finish then with my first intervention. So first we have to deliver on our, let's say, unique mandate, which is inflation.
Yep.
Okay. And then, according to the law, the European Treaty, we can, of course, look at other objectives. And of course, central bank can help in other dimensions. And you know that we are also entering into this climate change issue, also because it's so important from the point of view of financial stability. So I mean, these are risks that are there, regulatory risk, real risk that may affect the balance sheets of the banks, that at the end may also create a negative effect on financial stability. But at the same time, we have to be very careful with entering into other dimensions. Because let's come back to the origin of the independence of central banks. The independence of central banks, which, as you know, is even very much questioned today,
yes,
by many because of the lack of legitimacy. If we start to enter into other territories other than those that fundamentally are the ones that justify our existence as independent institutions, I think we are entering into a very dangerous line. So I would be very much in favor of limiting the scope of our objectives to the ones that we have today, and put all the emphasis on us on delivering.
On delivering against the mandate you've got,
exactly,
rather
because I mean the existence of the independent central banks is a utilitarian one. So we think, or we thought that by being independent, we're going to deliver better than otherwise.
So, Governor, forgive me. I think that's a very, very important statement, because it personally makes very good sense to me. The implication of that, though, is that you need to think about the architecture of government and rebuilding that architecture so that it does address issues about concentrations of digital power or areas around climate and carbon, and I wondered whether you think that we currently have sufficient institutional strength to deal with those kinds of problems if our big existing institutions say they have to get on with the job they've been asked to do.
I mean, that's a very difficult question, no? Because in the end, even the fact that we put this at the very top of the list, it depends on your legitimacy, and this is given by voters. So if voters think that climate change is important, it will become important in terms of policies. Right. What maybe is important, something that I want to try also to emphasize in this context and in this discussion, is what I tend to think we lack is the accountability discussion. So both at the monetary policy front, regulatory front, but also in all the other domains of public policies. And one way that I try to always to emphasize in many meetings how to solve this accountability issue is to incorporate in our decision-making process, both by Parliament and by central banks, an evaluation of our decisions. Evaluation of public policies is absolutely crucial, because the measures that you take are, you justify them because of the objective, but then what you have to analyze and you have to prove is that the cost-benefit analysis of the measure that you have applied it gives the right results and it doesn't give any other side effect. And this, of course, you can question it for monetary policy, but you can question it for any other public policy. And we don't have a real discussion on these issues. Even on climate, you have to put a cost-benefit analysis on the measures that you want to put on the table in order to fight against climate change. It's not simply because you say, no, I do this because I want to fight against climate, that this is the right thing to do. You have to prove that the measure that you are putting on the table is the right one. And the same happens with monetary policy, by the way.
Well, can I ask you in effect the same question, Martin? Do you think we're asking too much of business leaders? We're saying, okay, you're brilliant at running a fund management business, you're fantastic, but could you also work out how to allocate assets so you can sort out climate change as well? Is that just an unreasonable ask of CEOs?
Well, most of the people that work with me think I'm pretty useless at running. Yeah, it doesn't really follow that they do think. I think there is I think fund managers, I always remember the 30% club came to see me once, and they said, how do we get to 30% on the board? I said, speak to the owners of the company, i.e. the fund managers, and you'll achieve it. And now, therefore, I think the fund managers have a crucial role to play in how companies are run in the future. Now, in return, the institutions that give us the money to manage have to also take a more of a long-term view. So Paul Pullman of Unilever was complaining to me about fund managers taking a short-term view. I said, the problem, Paul, is your own pension fund is taking a short-term view on our performance. So to be fair to him, he did go away and he went to his pension fund and found out they were investing in hedge funds, active, and he said, no, our own pension fund and the big asset owners will now take a long-term view. That then passes to us, and then we can take a long-term view on companies. Now, remember, the rise of passive means that there is a large percentage of asset managers have to own the shares now. So in order to enhance value, they have to take a very active approach is the wrong word. They have to take a non-passive approach to those very investments that they have to hold. So asset managers hold a very crucial role in sustainability, all of these areas.
Interesting. Okay, Jose Antonio, it's 2 o'clock. We promised, although Manolo, I think, gave people a false fear that they weren't going to get lunch till 3.
He said
but
3 o'clock.
3, exactly. But the good news is it's coming at 2. So, but just before we all break for lunch, will you just try and wrap up and give us a sense, you think, of how this debate about trust directly affects what you're doing at Santander?
Well, basically, in general, I think when you ask the customers, and we saw this morning Richard telling us that trust in banks was relatively low, in banks in general, when you ask the question about your own bank, the score is much, much higher. Yeah. So we have 2 angles in trust. One angle is trust in the solvency of the bank, that is pretty high, and probably when you ask people, where do you put your money in terms of, if you look for safety, probably the most common answer is the bank, and we enjoy this trust, and we suffer in the reputational issues more related with the fairness of the relationship among banks and customers. Yeah, so I distinguish between the 2 angles. I think we enjoy, and we've done a lot since the crisis to enhance, to improve the trust in the solvency with all the regulation and all the the capital increase we done. And on the other side, it's still work in progress. Yeah? So we still need to do more work to convince our customers and the society in general that banks are here because we need the banks, the economy needs the banks to intermediate the flows among investors and savings, and we are here, and the deal is a fair deal. The deal we do with them is a fair deal for them as it is for the banks. We face significant problems, mainly due to the fact that the banks, we have been terrible in pricing correctly the things. We were charging too much for things that cost too little, and we were charging nothing for things that cost us a lot of money. Now, when you try to change this and you say, oh, I'm going to try to accommodate the prices I charge to the customers for according to, not necessarily in free market, but according to the cost to develop this business, is extremely difficult because customers use some service that used to be free. Remember the ATMs, yeah? The ATMs have been many tries around the world to start to charge for the ATMs that are extremely expensive, but nobody can charge. On the other side, when we do a cross-subsidy for another product to the products that we don't charge, suddenly in this digital world, fintechs and the others come along and destroy the revenue base in this product that the difference between the price and the cost was significant. And we are facing this wall, but we need to do a lot of work still on pricing. How do we price things and what a fair deal means? On the other side, traditionally we pay significant part of our cost, particularly in retail banks, in the branches, gathering through the deposits we were gathering. When the interest rates are zero or close to zero or negative, the whole business model is under threat. And this is something that we are trying to address, particularly in countries where interest rates are negative or zero. As a result of this, what is true in Europe is banks, as the governor said, have a low profitability, and this is a problem for the industry. This is a problem. The capacity to attract new capital is fairly limited. When you trade a 0.5 book value on average, the system, and when you return on equities 6% or even lower than 6%, this is a real problem for the bank. This is a potential real problem for the stability in the long run, because, well, we are living now in a relatively healthy, although we have a slowdown economic environment, but what we know is at some point we're going to face more difficult environment, and we need to have the capital there, and we need to have the capacity to convince investors that we deserve to be invested. And this is a problem, yeah? So as of today. I would say the second one that is very common, and people speak very often about this, and I tend to see more as an opportunity, is digitalization that is going on and new competitors coming from the digital world. It's true that the new competitors are coming, plenty of fintechs are there, but at the same time it means a great opportunity for us first to improve the quality of our services at a lower cost, particularly in financial inclusion. Something was told this morning when I was speaking about Mexico, the TUYO program. TUYO at the end is, in many countries in Latin America, 40% of the population has no access to financial services. Yeah. Why? Because given their income, it's too expensive to serve them through the branches. Now the digital world allows you to serve cheap. Yep. And this is a big opportunity. This is a big opportunity for financial inclusion. This is an opportunity to reduce costs in our ongoing business. And, well, on the other side, we have more competitors, but this is what it is. The only thing we've been asking, unfortunately with not very much success, is to have a level playing field. Yeah. The same activity, the same regulation, because we are facing competitors in one space that they do not need to follow the onboarding process, the know your customer, all the compliance rules, the anti-money laundering, all these things that cost us a lot of money, and we are competing not in the same basis. So this is the second point. First, low profitability, and then digitalization, and finally, regulation. Yep. We've been in a regulatory drive for how long? 11 years? And still uncertainty. So if I look forward, what is more or less now in the market is, at least in Europe, it's going to take another 10 years to finish. Yeah. So, and this is 20 years, since 2008
to now.
till 2028, and this is too long. Yeah, simply too long. Yeah, so and for that reason, certainty is important in every industry.
Yes.
So uncertainty, part of the trust, comes from the certainty.
Okay, well, on that definitive note, in some ways, for all of us to get on with it, I will try to wrap up this morning. I'd just like to say thank you to everyone for sparing the time to be here in this plenary session. Thank you in particular to Manolo and to Alejandra and to Peter. Attending these things is quite a lot of fun. Organizing them is hell on earth. So an enormous thank you on behalf of all of us, because we really learned a huge amount. I'd like to think that actually we can go off to lunch with an idea, and it's the idea that we came into a conversation about trust, most likely to discuss the aftermath of the financial crisis. And sure enough, you know, Richard Edelman kicked off with those 6 tsunami that have shattered trust, the biggest of which, of course, I think is the 2008 financial crisis. And you heard then from Mariana Mazzucato, who was really talking about the policy consequences of that, the ways in which people are still fighting and arguing with our financial system. But the thing I think that was most surprising about this morning was we didn't actually end up having a conversation that was mostly looking backwards. Actually, what was most striking was we had a conversation that was mostly looking forwards. And it strikes me that we can move away from this, saying we've got a thinking here, the beginnings of a structure for addressing the question of restoring trust. And I would just put to you that they are 3 big things. One is this point about institution building, the points that Carl Bildt and Javier Solana addressed, particularly within Europe, but the points that I think were also picked up by the likes of Glenn Medcraft when they were talking about creations of data custodians. I thought there was a really interesting train of thought about countervailing power, about in an age of concentrations of power, how do we create new organizations, new alliances, you know, that deliver on that. And it seemed to me that Glenn made that point, and Louise from the BIS, the idea that we could actually use these new organizations to create a race to the top was quite encouraging. But most of all, I think, from here was a recognition that we're going to need both new carrots and new sticks, both when it came to Anna Botin's conversation about harnessing purpose against a set of metrics that really incentivize people within the bank and within big business, but also new sticks too, an understanding, as José Antonio was just saying, of a level playing field, of a level of transparency, of a decision that our regulations must be fair for all. It seems to me as though those are ways that we can restore trust. And the answer for all of us individually is that more is expected of us, whether it's as governors and regulators, CEOs, or investors. And so I hope that gives us a structure to go away and think about not just over lunch, but think about restoring trust as we head into the year ahead. On that note, a huge thank you to Martin, to you, José Antonio, and to you, Governor. Thank you very much indeed, and I'll hand back to Alejandra.